I'm Scott Carr in the Bloomberg Newsroom. Some of the stories we're watching. President Donald Trump today suggested that another delay in what he calls higher reciprocal tariffs is unlikely, raising pressure on other nations to negotiate trade deals with his administration. Reports say U.S. officials plan to conduct staggered trade negotiations using a new template that sets common terms for many of the talks. People familiar tell the Wall Street Journal in an attempt to streamline the trade talks, officials plan to use a framework prepared by the U.S. Trade Representative's Office that lays out broad categories for negotiation, tariffs and quotas, non-tariff barriers to trade, such as regulations on U.S. goods, but also the categories of digital trade, rules of origin for products, and economic security and other commercial issues. Speaking to reporters today, Trump said he would not drop new higher tariffs on China unless Chinese officials offer something substantial, as he put it, in return. Bloomberg's Tyler Kendall tells our Balance of Power program the president said good progress has been made in talks with Japanese officials, but would not confirm recent reports of a recent discussion he may have had with Chinese President Xi Jinping.
He didn't give us many details, didn't give us a timeline or what was discussed, and reporters tried to pin him down on it when he was heading out towards Marine One, asking if this call had taken place since his tariff announcement. And take a listen to what he had to say here when he was asked.
You said you spoke with President Xi. Have you spoken to him since the tariffs? When did you last
I don't want to comment on that, but I've spoken to him many times. Yeah, I'll let you know at the appropriate time. Let's see if we can make a deal.
There's Bloomberg's Tyler Kendall. The president also said today he believes financial markets were adjusting to his tariff policy, downplaying the volatility that's hit equity and bond markets this month after he'd announced plans to hit about 60 U.S. trading partners with higher tariffs. A gauge of the U.S. dollar's on track for its worst performance during the first 100 days of a U.S. presidency going back to the Nixon era, when America abandoned the gold standard and switched to a free-floating exchange rate. The U.S. dollar index has lost about 9% between January 20th, when Donald Trump returned to the White House, and April 25th, putting it on course for the largest loss through the end of the month since at least 1973. A solid Wall Street week ended with gains for stocks today as a rally in the market's most influential group offset conflicting signals about progress in President Trump's trade negotiations. A surge in megacap sent the S&P 500 above 5,500, with the gauge notching its longest advance since January. Tesla jumped 9.8%, while Alphabet climbed on solid results. Equities did briefly lose steam as the president suggested another delay to reciprocal tariffs was unlikely. At Friday's close, the Dow had gained a fraction or 20 points. The S&P gained 0.7 or 40 points. A rally in tech stocks saw the Nasdaq improved by just over 1.25% or 217 points. The yield on a 10-year Treasury note is at 4.25%, the 2-year at 3.76%. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.